Okay, dear financial management student, let's discuss this question on sensitivity analysis. As usual, we have taken this question from Study Hub. I'm Abil Ahmed, financial management expert. So let's dive into this question. What is the sensitivity of the project decision to change in sales volume? So very simple. When we are performing sensitivity analysis on sales volume, then you will be just using a simple formula that sensitivity percentage is equal to NPV divided by obviously the present value of contribution. But here you have to make sure only one thing. If examiner gives you the NPV after tax, then your contribution, present value of contribution will have to be after tax. Sometimes examiner does not give us any information of taxation, means if NPV is before tax, then obviously the present value of contribution for by using that we divide NPV, that will also be before tax. So simply the rule is, and if NPV is after tax, then present value of the contribution will also be after tax. A company has calculated NPV of a new project. That's nice. Sales, variable cost, fixed cost, corporation tax. So obviously this NPV is of course after tax. Everything is in present value terms, so things are very, I would say, easy. Simply sensitivity percentage is equal to student NPV is 200, but which is after tax. So we divide this with the present value of post tax contribution. Okay, and we know that contribution is sales minus variable cost. Sale is 2000 in present value terms, variable cost sale is 4000, slip of tongue again. Sales is 4000, variable cost is 2. So the contribution in present value terms is 2000. But this 2000 is before tax. Since NPV is after tax, so we need contribution will have to be after tax. The tax rate is 20%. It means after tax, just to make it after tax, multiply this with 1 minus tax rate. So 2000 into 1 minus 0.2 will get 0.8. 0.8 into 2000, we will get 1600. So simply the sensitivity percentage is equal to 200 divided by 1600 into 100. So 200 divided by 1600 in 200, I'm getting students 12.5. And interpretation of this 12.5% is if the sales volume reduces by 12.5%, then obviously NPV will become 0. Let's see what. Yes, the answer is A. And Study Hub people, they have done the more or less the same thing. So simply the sales volume reduces by 12.5%, then simply your NPV, obviously if the project life is, let's say, 3 years, then 12.5% every year sales volume will reduce. Then obviously NPV becomes 0. So students, that is all about the sensitivity analysis. The main catch is if NPV is after tax, then the variable by which we divide that NPV, that has to be after tax. If NPV is before tax, the variable which we use while calculating sensitivity analysis in the denominator, that has to be before tax. So thank you very much for watching this financial management concept building video. And for more, if you really enjoy this video and you want videos like this and other videos on any ACCA papers, do join our YouTube channel. And don't forget one thing, we have the alhamdulillah honored of producing world top in FM, world top in AFM, and this is our lifetime achievement. So thank you very much. I hope you people have enjoyed this video.